Good morning, everyone. My name is Cyril Satwik, and I'm from first year BPS, and my roll number is 45. And the company which I've chosen for the corporate accounting CIA is Flipkart. So let's start with the intro. Flipkart is an Indian e-commerce company. It is currently headquartered in Bangalore. It was basically incorporated in Singapore as a private limited company. Flipkart company mainly deals in online sales in categories such as consumer electronics, fashion, home essentials, groceries, and lifestyle products. Flipkart was founded in the year 2007 by the Bansal brothers, namely Sachin Bansal and Benny Bansal. Flipkart is basically a B2C company, meaning it basically sells its products from business to final end consumer. In the year 2018, Walmart acquired Flipkart by purchasing a stake of 72% for $16 billion. So let's move on to the current management structure of this Flipkart. Its CEO is Kalyan Krishnamurthy, and the vice presidents of Flipkart are Anand Lakshmi Narayan and Bharat Ram, and the chief data scientist of Flipkart is Mayur Datar.
Now let's take a look at the balance sheet of Flipkart for the financial years 18 and 19. The amounts are in millions of Indian rupees. So let's take a look at assets now. Non-current assets. Plant property and equipment decreased from 1,136 to 11. Capital in progress decreased from 137 to 0. Goodwill remains the same. Now non-current financial assets. Non-current investments have decreased from 5,709 to 0. Other non-current financial assets decreased from 9,043 to 0. Total non-current financial assets decreased from 14,752 to 0. So the total non-current assets have decreased from 16,181 to 81. Now current assets. Inventories increased from 22,531 to 24,498. Current investments increased from 16,082 to 25,799. Trade receivables have increased from 12,343 to 25,563. Total current financial assets have increased from 51,179 to 69,784. Other current assets have increased from 8,877 to 14,226. So the total assets have increased from 98,776 to 1,08,589. Now let's move on and compare the liabilities for the year 18 and 19. Let's start off with the non-current liabilities. As you can see, there hasn't been much changes in the non-current liabilities. The borrowings of the company are nil. The total non-current liabilities are nil. The company has just increased their provisions for non-current liabilities from 76 to 93. And the current liabilities, the borrowings for the current liabilities have decreased from 2,285 to 1,578. The current trade payables have increased greatly from 28,706 to 40,598. The total financial liabilities have increased from 31,013 to 42,669. Current provisions have increased from 103 to 111. So the total liabilities have increased from 35,242 to 47,200. Now let's take a look at the statement of profit and loss of Flipkart. Let's carry on with income. As you can observe from the PPT, the incomes have increased greatly for the year 17-18 to 18-19. The sales have greatly increased from 2,14,386 to 3,05,712. Again, the values are in millions of Indian rupees. The other incomes have also increased. The total income have increased from 2,16,577 to 3,09,310. Let's move on to the expenses and look at the expenses of Flipkart. Purchase of stock in trade have increased from 2,36,609 to 3,43,968. It means they have purchased more amount of stock. Changes in inventory of finished goods have decreased from 5,099 to 1,967. Employee benefit expenses have also decreased. Finance cost has increased from 234 to 637. Depreciation has also decreased. and the total expense has increased from 2,37,225 to 3,47,663. So currently Flipkart is running at a loss of minus 38,353, and it has increased from the year 1718. 1718 losses were at 20,648. Now let's have a look at the revenue growth of Flipkart. This is the chart of the Flipkart revenue growth for the past 8 years. So as we look at the year 2014, the revenue was at a all-time high of 140%, and it has reduced from there till 2017. And in 2018, Walmart took over Flipkart, and then again it bounced back from 15% to 39%, and again it has done well for the year 2019 and increased its revenue by 3%, and it drastically reduced to an all-time low of 12% for the year 2020, and it's again making a comeback for the year 2021, and it's at 25%. As we all know, for the reason it drastically reduced to 12% was because of COVID and the lockdown which was happening. In the above statement of earnings per share, we can see that the basic and diluted earnings per share is at a loss of 5,727. A EPS loss means a negative earnings per share, which tells you how much money the company has lost per share of the outstanding stock. It is also called as net loss per share. So therefore, in conclusion, there is an under earnings per share. These are the basic uses of the financial statements. It lets you know how financially the firm is performing, and it also lets you analyze the financial position of the firm. And it lets you compare intra and inter firm. Intra basically means comparing with other firms within the sector, and inter means comparing within the firm.